Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be talking about the ES, the NQ. We're going to be talking about where they're likely to go and why and what we need to watch for so that we can look for an edge in our trading here today. So there are essentially, several different ways this could play out, what's going on right now in the market. The first way is the market could open and immediately start to go higher. The second way is the market could pull back down to try to test the momentum from the second half of yesterday and then reverse and start going higher. The third one is it can pull back down to test that momentum, not find support, and then come all the way back down to yesterday's lows. Okay? Those are basically the three scenarios that could happen. Immediately higher, pull back to find support, then higher, or pull back to never find support and just go straight all the way down to yesterday's lows. So I can't tell you right now which of those three is going to happen. I can tell you in terms of probabilities, which I think is more likely than the other, but I can't tell you for sure what the market is going to do. However, I can tell you what to look for in real time as it's happening to give you an indication of what is likely to happen. Okay? So the first one that I think is most likely to happen is I think the market is going to pull back today to test the momentum from yesterday. So I think it's going to try to pull back down to 5,500. It doesn't necessarily have to make it to 5,500. There's lots of levels in here where the market could find support and reverse up and out of here before it gets down to 5,500. Okay? So if we get selling below the overnight low, below 55, 54, if we get new selling, that is the first signal that the pullback is happening. That is the first signal that we're not going straight up and we're likely to go down at least for a little bit. Then each one of these potential support levels, I will watch for support. I will watch to see, does the market bring in buyers there? If the market is able to bring in buyers, that increases the odds that the market just made a low and it's going to turn around and head higher. Do I know which level will be support? I don't. But when I see it in real time, I'll be able to recognize what I'm seeing as support. Okay? Now, if it works its way all the way back down to this area around 5,500 and it doesn't find support there, which again, that is the most likely scenario to me. If it doesn't, then I know we're heading right back down for the lows once again. Okay? So I can't tell you which is going to happen, but I can tell you what to look for when you get there, which is support at those levels. Now, as far as the market going higher today, if it's going to turn around and just go straight up and not come down at all, the first thing I would be looking for is new buying above yesterday's high, above 55.68. I would see that as bullish. I'd be looking to test the overnight high at 55.83. And then if we got above that high and we found new buying, I would be bullish for continuation higher. Okay? So first I got to see the support above yesterday's high. Then I got to see the support above the overnight high. Then I can trust that the market's just going to go straight up today. Okay? And that to me is the least likely scenario. So most likely pullback that reverses. Second most likely pullback that doesn't reverse and just tanks lower. Third most likely straight up from here. Let's see what happens. So we call this a chop zone. Obviously, I don't know what the market's doing until we get either above yesterday's high, 55.68, or we get below the overnight low, 55.54. Until we get above or below one of those levels, I have no clue what the market's going to do. So there's no reason to even be thinking about trades. I'll just let the market chop around and I'll watch what happens when we get to one of those levels before I make a decision for what I think is going to happen next. This type of trading is called trading the two-way auction process. It is basically recognizing that every move the market makes is a tug of war between buyers and sellers. Sometimes the market has more buyers and then the price goes up. Sometimes the market has more sellers and the price goes down. So if you can learn to recognize, is there more buyers or sellers, you know what the market is likely to do next. And then all you need to know is where are the levels where this tug of war is likely to take place, right? Where is the wrestling, the most intense tugging going to happen? And just watch when you get there and see what happens. Are there more buyers or sellers when you get to that level? So when I say new buyers above yesterday's high or new sellers below the overnight low, that is what I'm talking about. I'm talking about the market getting to that level and then more new business happening at that level, either long or short. And so that tells me if we're going to go up or down. If anything I talk about today is interesting to you, feel free to ask questions in the chat. Also, I'll be teaching a workshop starting next week, starting Monday, where I explain all of this in depth, not just the two-way auction process and how to read a market profile chart to give you those areas to pay attention, but also how to be a trader, how to develop a consistently profitable system, how to manage your psychology, how to manage your risk, all of the elements that are required, the full soup, so to speak, of being a successful trader. I'm going to give you all of it in this 2-week-long course called Mastery of Markets and Minds. There's a link in the description. If you are thinking about it, you should sign up. It starts next week. It runs for 2 weeks. It's 4 hours a day for 2 weeks. If you can't watch the sessions live during the day, if you want to focus on your trading or you have a day job or whatever, and you just can't watch the sessions live, all the sessions are recorded and you can watch them later. But if you want to be able to watch them later, you have to sign up now. Don't reach out to me next week or 2 weeks from now and say, hey, can I buy the course and just watch the videos? You got to sign up now before Monday to be able to either watch it live or go back and watch those videos later. I do not teach these courses often. I probably won't teach another one this year. It probably won't be until January, February before I teach another one. So if you're looking to learn this stuff, now is the time. It's a $400 course, but I am telling you, if you are serious about being a trader, you will make way more than $400 of profit in the years ahead. First, you got to figure out what is the system you need to work on to become profitable, right? That's what this course teaches. So consider that if you will. It looks choppy, very choppy. They are chopping us up right now. Okay, so the first piece of information that I want to make note of as I'm watching this auction process take place is that when the overnight opened, there were more longs in the market than shorts. Okay, it was what we call net long. It wasn't that much net long. It was only a little bit net long, but it was net long. And the reason that we know that that's the case is because the market closed yesterday at 55.57 and opened today at 55.63. So for the market to move over the night from there to there had to be more people going long throughout the night than there were people going short. Because if there was more people going short, it would have gone down, right? So we know the overnight inventory is net long, okay? Right now, it looks like the market wants to head up and test yesterday's high. It wants to head up and test 55.68, which is that first sort of tug of war level that we'll be watching. If these ticks are still above the zero line by the time we get to that previous day's high, we are more likely to turn around and come back down. And the reason is because there are still longs from the overnight that haven't taken profit. They will likely start taking profit above yesterday's high. They did it all night long. So if we get to yesterday's high and those ticks are still above the zero line, that would make it more likely that we will look above and fail. Now, if the ticks get to the zero line first, when we get up there, it's a 50-50 chance. They can find support or not, and we will watch the ticks to tell us whether they're bringing in those buyers or not. All of this and more in the Masteries of Markets and Mind workshop. Good morning to John G, Will, Rick New, Nap, Grizzly Bull, Trevor, Willie T, Red Pole, Fig, DNK. DNK says another V-shaped recovery today. Honestly, it's a possibility. I could see it. I could see the market literally doing that, going like, it is certainly a possibility. Obviously too early to predict it right now. Jay in the house, another day in paradise. Michael is here. Arjit, good morning to you. And to all the pirates. Caesar says, good morning and good luck. May the trading gods be with you. Stephen is here. Bill K in the house. Anthony is with us. Anthony says 60 points down is a decent chunk. Yeah, like I said, I talked about this in the workshop. The morning show this morning. You can feel bullish as a swing trader. You can feel like in the days and weeks ahead, the market is going to go higher and still short for day trades today if you see that new selling below the overnight low. Because if you see that new selling, they're almost certainly going to 55.42. And if they bounce there, you can get out of the trade profitably, right? If they don't bounce there, you can stay in it until they get lower and then get out of the trade whenever they bounce. And you're right, you might make a 70-point move. So there's nothing wrong with shorting just because you have a bias that's long, bigger picture. If intraday today, the market's telling you it needs to dip first. It's so choppy. Extremely choppy. They're trying to get you long and short. Design Knob in the house. Willie T says, I made many times the cost of the course based on the new material during the course. It's a game changer. Thank you, sir. Design Knob says, does the workshop contain a deep dive into the murder bot? No, we don't even talk about the murder bot anymore. I am almost never in a trade nowadays by the last hour of the day. I have locked in my profits long before then. I'm not even watching the market anymore. M. Zoltan, good morning to you. Nisho is here. Danny says, any news today? Nothing that jumped out at me as being important. I would say the mechanism that is at play today in the market is just deciding how they're going to handle what happened yesterday. Are they going to chase price and keep buying stocks, or are they going to take profits and let the market cool off? And I don't really care why they make the decision they make. I just want to know which decision they make. Percy in the house. Pavel is here. John says we got the 30-year bond coming later on. Good morning to Felipe. Design Knob says the 355 son of Murderbot is almost more angry these days. It's all in the last 5 minutes. Yeah, like I said, I'm not really paying attention in the last 5 minutes anymore. With how choppy and unpredictable the markets have gotten over the last few years, I've really gotten obsessed with just locking in profits and walking away for the day. Once I'm up and I'm feeling good about how much I've made, I don't push it anymore. I just say, let me save these gains for tomorrow. Whereas I used to try to sit right until the end of the day and make every penny I could possibly make. Now I'm like, nope, take my gains and enjoy my afternoon. Okay, so we are below the overnight low. This is the first level where we might break out of the chop zone. If we turn the overnight low into resistance, this is different than a liquidation where the market instantly sells off lower. If we come back up and we turn that overnight low into resistance, that is bearish for continuation to the downside. If we instantly fall without coming back up for resistance, that is still not tradable because a liquidation break might reverse right up out of here. Okay? So let's see what happens. Can we turn the overnight low into resistance? Jason said Charles was on the phone with his travel agent from all the tendies he made yesterday. I did actually have a very good day yesterday. Not to be braggadocious about it, but it was better than average. But will I be calling my travel agent? Absolutely not, Jason S. Because what I've learned about trading is when you have a really good day where you make lots of profits, you should just save that money because there will come a day where you have a bad drawdown and you'll be glad you have a war chest of previous gains to help you absorb the pain of the drawdown days. Okay, so this is where things get tricky. We are getting new selling below the overnight low, but they never came back up and tested the resistance. So that increases the odds in my mind that this level right now, 55.42, will be support that will come back to test for resistance. Once again, if it holds as resistance, we can get bearish for the next move, but it may just blow right back up to the opening price. Let's see what happens. If we break through 55.42, I will be bearish for further downside continuation. This level, 55.42, is what we call the base of the spike up. This is another one of those very important levels. where at the end of the day yesterday, the market told us it was bullish, that it still had more buyers at the end of the day. So if we get below that intraday today, we need to put the market on sale to bring in those new buyers. Hence why I'm looking for a bounce here. Okay, so no bounce whatsoever. That's a when what should happens doesn't. I am now officially bearish. We have to stay below this overnight low to keep me bearish, so we can bounce up into it. But I now think there's a higher probability it will act as resistance if we do, because we were able to get below the base of the spike. That tells us we aren't bringing in new buyers yet. So I will be looking for resistance at the overnight low. If they can hold it, continuation to the downside. But I am bearish, at least short-term intraday. Okay, here we go. Looking for resistance here at 55.53. If you have not yet, please smash that thumbs up button. Like and subscribe. Like and subscribe. Hitting that like button is a way to support the channel. It just tells the YouTube algorithm that I'm putting on some good entertainment here, and they ought to send some new people my way. Dun dun. Dun dun. Moment of truth. Ticks are at the zero line. Market's at the overnight low. Will the sellers step in and keep the momentum going to the downside? Novice trader. I can't force it. I must be inspired. It must just come to me. Market not showing its hand yet. Ticks are showing buyers. So we're seeing resistance, but the buyers are trying to break through. Tug of war. Tug of war. Tom says gold is pumping. Is Bitcoin pumping? Sure hasn't been. Ooh, you're right. Gold's breaking out. Dude, is that new all-time highs again? Man, yes it is. Gold is pumping. That is a correct analogy. So gold's been in a balance for about a month, going sideways in a range, and that is a breakout of that range. So you know a balance leads to excess. The good news, they will likely be able to make a move up to about 2,600. The bad news, they may need to pull back one more time to test that breakout before they do. Which is, of course, the same thing we're looking for on the ES today from yesterday's breakout. Tom says Bitcoin will pump later. Tell me when, Tom. When's it going to happen? I think Bitcoin still needs one vicious, massive liquidation. A 10% down day is required. DNK says, I'm telling you, they will get all the stops for the longs. Then we get a recovery. The bots have gotten very smart. Yeah. I mean, I will just say the market, it has a tendency to kind of get in patterns where it does the same thing. Those patterns usually only last for like 3 or 4 days. So we had 3 days in a row with V-shaped recoveries. If they do it again today, people will catch on by tomorrow, and then it won't happen. And the real question is, okay, if we're going to get that V-shape, where's the low? Are we going to go all the way back down to, 5,500? Or is it going to happen somewhere in between? And that we have yet to determine. How low will they go? Okay, so the first test of the overnight low brought in new sellers. We can tell because the ticks were above the zero line when we got there, and they're back below the zero line. So as we print the next TPO, as we print the B period here, the ticks are what I'm laser focused on. If they continue lower, price will follow to the downside. If the ticks reverse now and get back above the zero line, we're going to take another poke at that overnight low. Let's see what happens. Dennis, boy, making quite a prediction. Now, Dennis, I'm just going to say right off the bat, I think Bitcoin's going to 100,000. I don't think it's doing it in the next few weeks. That is quite a prediction. He says cup and handle on the weekly. I do not see that at all. So I'll explain my thesis very simplistically here because I'm a simple guy. Okay. They got momentum. They made a new all-time high. Everyone's super excited. They got a dip. They put the market on sale, but they couldn't make that new all-time high, right? It wasn't enough to break the high. So they put it on sale again. Still couldn't make a new high. So they put it on sale again. Still couldn't make a new high. So they're going to, you guessed it, put it on sale again. That's why I say I think we need one more like vicious liquidation to just squeeze every weak hand. When you start seeing people on, Twitter and stuff like that normally love crypto, talking about fuck crypto. It's a crypto winter. It's going to go to zero. When you start seeing all the bearish sentiment in the normal crypto bulls, that'll be the moment that it'll reverse and actually make a new all-time high. And then once it does, yeah, I think 100K is well within range. But I'm looking for that one last dip. Okay, so the ticks are back above the zero line. That means we need to test the overnight low again for resistance. That is less bearish to see, but I still remain bearish as long as it holds as resistance. Sheena says, I like your take on Bitcoin. Some say it's like a fiat currency, but with nothing backing it up. But then again, so is the dollar. Do you think it's here to stay? And is it the future? Well, the dollar does have something backing it up, and that's America. America, fuck yeah. We got the biggest military. Also the biggest economy. Also the best education. If you're talking about college level education. So, yeah, the US dollar has a lot backing it up, which is essentially the trust that the citizens of America will keep producing goods and keep paying taxes, which they will. Because there's nothing the citizens of America love more than buying new stuff. And if you want to buy new stuff, you got to go to work to make the money to buy the stuff. And if you go to work and make the money, you pay the taxes. And so that's what backs up the US dollar. The thing that backs up Bitcoin is an idea. It's a thesis. And the idea is quite simply that the supply is capped. There's only ever going to be 21 million Bitcoins. But that the demand is not capped. And so if in the years ahead there's more demand, more people want Bitcoins, the price of a Bitcoin will have to go up because there's not new Bitcoin. There's only 21 million. And just to be clear, there is more than 21 million millionaires in America. So in just one country, there's more millionaires than total number of Bitcoins. So if every millionaire just wanted to have a Bitcoin for whatever reason, maybe they see it as a digital gold, maybe they start using it for transactions, whatever. Maybe it's just it's like buying a Gucci purse. It's just a cool thing to own a Bitcoin. For whatever reason, if more people want to own it, it will go up in price because of the capped supply. As far as is it here to stay, I have no idea. Will Bitcoin still be a thing 10 years from now? I have no clue. But right now, it is still here. And so I think price can still go up. All right, but let's get back to talking about the ES because the price is just dancing on this overnight low. So again, I am still bearish, but I am less and less bearish with each poke at this resistance. So you can think about resistance like a semi-permeable membrane. The more times you poke and poke and poke at it, the more likely you are to poke through. And as soon as you poke through, you squeeze anyone that's been selling below that overnight low. So for now, it's holding and it's still bearish, but these sellers need to get that pop to the downside if they want to keep bringing in new sellers. Otherwise, we're going to be back in the chop zone. Scooball in the house. Been a minute, Scooball. Good to see you. He says there are so many unique items everywhere. I'm not sure what you mean by that. Talking about crypto? Thomas says, have I used Sierra charts? I have not, but I have heard good things. I have not talked to anyone who has switched to Sierra and hasn't been glad they did it. However, they all talk about there being a big learning curve. So it's not quite as user-friendly. It takes some time to get it all programmed and set up the way you want it. But once you do, everyone seems to be happy with it. Okay, so NQ, slightly different position than the ES. The ES is building up resistance below its overnight low. whereas the NQ is back inside of it. So the NQ had a look below and fail. So the NQ is in a chop zone, and the ES is chopping right below that overnight low. So I would say if the NQ doesn't sell off soon here, then the ES is going to pull back up into the overnight range, and both markets are going to keep chopping for a bit. I'm sitting here watching this thing grind and grind on the overnight low, and I'm like, why won't it just break lower? And then I see that look below and fail on the NQ, and I'm like, chop on the Q is holding up the ES for now. All right, NQ back through the opening price. That is a look below and fail. That is bullish to see. So now we are in a tricky place with the ES. Yep, back in the overnight range. So I'm back to neutral. Sorry, guys. All right, so this is where things get interesting. What were our three scenarios for today? Scenario number one, the market tries to go lower, finds support somewhere, and then reverses back up to begin the momentum to the upside. If the market can now get above yesterday's high, get above 55.68, and turn that into support, either the overnight high or even the opening price into support, then that was our low. And I would be very bullish for continuation higher. However, I'm completely neutral until I see that happen, because this might just be, part of that pullback to the downside. So I see this as a chop zone once again below yesterday's high, and I'm willing to step aside and let them do their thing. Because if they do get above yesterday's high and then turn it into support, there's plenty of money to be made on the way up from there. I don't have to chase it right here. Or force it, right here. I can wait for confirmation that it does want to go higher. But I will say this is the first check to that bullish box. The fact that they didn't have a larger pullback. All right, passing back through the opening price on the ES is bullish to see. They should be able to test yesterday's high, but I will only get bullish if we get new buying above there. Let's see what happens. Novice Trader says, why don't you consider that volume building inside the spike as bullish? I do, but I first needed to see the resistance break on the overnight low, because you could say, as the market was just chopping sideways down here, you could say, oh, look, it's building volume above the base of the spike up from yesterday. But you could also say, oh, look, it's building volume below the overnight low. And you just don't really know for sure. So I'm waiting to see what happens with that overnight low before I can have confidence that that's buyers building for the move up rather than sellers building for the move down. The other hint was the ticks. I was waiting for those ticks to get smacked down again, and they did not. Also, I did not like the look of the low, because this low was so close to the base of the spike and only had 59 contracts. I felt like it needed another poke, which made me a little more bearish. But now I don't care about it at all because we're back above the opening. Pavel's dog in the house. Boy, that must be an old dog. That dog lived a long life. He says, I see a lot of buying into the selling from 947 to 950. Yeah, I don't really think about it in terms of time at all. I just always think about it in terms of support and resistance. So inside the overnight range, right? Market pushed below the overnight low, resistance, 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 resistance. That resistance was sellers, right? Going short. But where were they putting their stops? Back inside the overnight range. So there were stops all in here. So that buying that you're seeing is those shorts getting taken out of their shorts. It's those stops getting taken out. Now we find out if there's real new buying. Speaking of which, we are above yesterday's high. Can we turn either yesterday's high or the opening price into support? If so, we get bullish for continuation to the overnight high. NQ. Okay, so the NQ is looking bullish here, and the reason is because it looked so bearish before the market opened. We talked about this in the morning show. This looked like it may have already made the move it was going to make in the overnight. So the fact that we're less than an hour into the regular trading hours and we're already back up here, that is telling us there are more buyers for tech. So this is bullish to see. They should be able to get above the overnight high now. You know, turn yesterday's high into support, come back above the overnight high. If they can turn that into support, the next target is 19,420 to the upside. On ZQ, still waiting for more information on ZES. Good morning to Nor Auto Trading. Tom Gunn says data from Coinbase, not currently working through TradingView. I'm sure they'll fix it quick. If not, you could look at Kraken. Fig says, I got 12 minutes for this 30-minute candle to wick under the opening price, and I am short big. So you're saying if in the B period, so when we print the C, if the market is below the opening price, you're shorting? Big? Okay, have fun with that. Danny says, I would say I would add to it if it comes back to the B low. Me too. I would get in it with resistance at the overnight low, not the pass through the opening price. So let's say the C period comes down. It starts to turn that overnight low into resistance, or like he's saying, turn that B period low into resistance. That's when you can get short. But just passing through the opening price? Nah. Too soon, in my humble opinion. Vic says, yes, go short with me. It's not the going short that bothers me. It's the big size. You're still in a chop zone. And you know what they love to do in chop zones? Pop the market lower real quick to get everybody short and then reverse it right back up. Fig says, better to be early than late. I suppose that's a personality thing. That doesn't work for me. There's a great quote from, what's his name? Anyway, I forget his name. Jesse Livermore. There's a great quote where he says, waiting for confirmation is the price you pay for insurance that your trade will work. You know what I mean? I would much rather, if I think, for example, the market's going to fail above yesterday's high and it's going to pull back down to 5,500, let's say. I would much rather enter that trade at 55.50 with a very high probability of it working than enter it at 55.65 unknown, where it could dip down and reverse right back up. Now, yes, I'm locking in less profits, or I'm making less money on the trade, but the probability of the trade working has a much higher success, right? And that's what it's all about. Over a series of, and I'm just talking about for me personally, over a series of trades, over 10 trades, 20, 30, 40 trades, if I take them where they have a higher probability of working instead of where they could make the most possible money, I will win much more often. And so that's generally the way I look at trading. But everyone's got a different personality, and you just got to do what's right for you. One Lot Trader says NVIDIA is on the move. Let's take a look. I think NVIDIA is always on the move. There's so much activity in NVIDIA options on a day time frame that it always does something. It's always going somewhere. Yeah, I would say I wouldn't be super bullish here unless they turned yesterday's high into support, 116.27. Just because this is just a big, messy balance area right here. Both markets are feeling like they're going to be very choppy to me. So the NQ now had a look below and fail of the overnight low, which gave it that slingshot back up to the overnight high, and it's now getting a look above and fail of the overnight high, which means more chop, more sideways, more grind. Oh, sorry. Fell asleep there. So they're now doing the exact same game that they did at the overnight low at the previous day's high. So overnight low, they pushed below, made it look like they were bringing in sellers, but the ticks were saying, nope, we're actually bringing in buyers. And now they're doing it again at the previous day's high. They're making it look like they're building support, but the ticks are saying, nope, they're getting short. So choppy. 128 people hanging out. Only 59 likes. What's it going to take? There's nothing else happening. Push the button. Push the button. Okay, so as we print the C period, the base of the B period single prints is that potential support level. If they can hold the base of the single prints, they will likely start one time framing higher, and I will be bullish as can be. If they fail those single prints and pull back in, I will remain neutral. Pour high increases the odds that we're going to start one time framing higher. Bullish to see, but expecting a dip first. Gin and Tonic 69 says, just bought the course. We will meet there. Yes, we will. Literally face to face if you'd like. On the last day of the course, I do a Zoom call where, the rest of the course is a webinar. You just see me. But on the last day, I do a Zoom call for everyone to hang out, have a drink, a little face-to-face chat if they'd like. So I will literally meet you there virtually. David says, is the NQ one time framing higher? Let's take a look. Not yet. NQ identical to ES right now. So they got single prints they left behind in the B period, back down to 19,290, and they got a pour high. So the pour high says they are likely to make a new high at some point, but the single prints say they will probably want to pull back and backfill those first and then make that new high. And pretty much, guys, just wait till these two icebergs disappear before we know what's going on. Because this is a lot of icebergs trying to stop the market from making a new high. So until they disappear, we won't really have a clear understanding. DNK, don't worry about it. I'm just experimenting with it. I just turned it on to play with it, so you don't have to do that. I'll make announcements if it's anything new and exciting. Okay, so the market is now one time framing to the upside. That is bullish to see. So that is the dip that found support and is now gaining momentum to the upside. It does not feel to me like it's going to be like yesterday. I don't think this is going to be a 50-plus point day. So I believe the highest probability now is that we will head up to 55.84. But I will need to see new buying up there to really think they're going to keep it going. Otherwise, it feels like it's going to be a very choppy sideways day. But as of now, the bulls are in control. And as long as they continue to one time frame to the upside, meaning they continue to make higher lows, they will remain in charge. Look at that. Both times I put up a banner, they instantly reversed it. Oh, awesome. Screwball says, don't trade it, guys. Yeah, I mean, it's going to be choppy. Clearly, it's going to be very, very choppy, but it is trending to the upside. So there is a high probability we'll get to that overnight high sooner or later, but not that it will be a straight trip to the upside. We also have an iceberg now at the high and the low. Oh, they just canceled the one at the low. So never mind on that. But whenever you see icebergs at the high and the low, that often means there's going to be chop. Fig says, might get my short after all. Well, Fig, we were a minute ago below the opening price. But now you can see why I wouldn't wanted to have shorted there. Right? Because it just turned around and bounced right back above. So that's why you would want to wait for the resistance at the overnight low. Because inside that overnight range is choppy. And what they just did in the C period, is what they love to do in a chop zone. Make you think it's going to break higher, get you long, and then take you out, and then go up anyway. It's just a real bitch when they do. So if you could, like I said, if you could give up on some of those points to wait until you're seeing resistance at the overnight low, you have a much higher probability of the trade working. But that's just little old me. Anthony says, just another casual 100.1 minute candle in the NQ. Say it ain't so. Oh, yeah. And it's a week low now because it's right at the opening price. Q looks choppy. Very choppy. Novice Trader says, can you consider this move down a small liquidation? And if it goes above the high, is going to be very bullish? Normally I would say yes, but I want to reiterate, guys, today is not going to be yesterday. Okay. Today is not going to be a day where they make a ginormous move to the upside. Today is going to be a choppy day. Just look at how the overnight traded all night long. Sideways in a very, very tight range. So I'm not saying we're going to stay stuck in their range, but I think we're going to have a similar type of day. The market will push as far as it can, then it'll run out of steam and go nowhere the rest of the day. That's what it's feeling like to me. So was it a liquidation? Yes, it was. Does that liquidation have potential to give us that next, shotgun to the upside? Yes, it does. But it all feels like bots. So proceed with caution. Do not assume today will be yesterday. As I said, 55.84 seems very reasonable to me as a target to the upside, but I would truly need to see new buying to think they're going to take it beyond that. It's just so choppy. Nisho says, possible to get some light on icebergs. Get some light on icebergs. I'm not sure what you mean by that. Do you mean explain it? Explain what icebergs are? Yeah. Okay. Yeah. So essentially what an iceberg is, you can see them on the chart. They're these little, where they have the two little triangles right next to each other. And then there's a number and then a number that's in brackets. So what that is it's a computer. And the way they enter trades is, instead of putting all their liquidity in the order books. So let's say this one right here. Let's say that this computer wants to go short, 100 contracts, okay, at that particular level. Instead of just putting 100 contracts in the order book where we could clearly see the liquidity, they just put one contract in the order book. That's it. But when the market gets there, it automatically adds another order and another order and another order and another order until the 100 orders they want to fill get filled. So it's like an iceberg. You know what I mean? The water level, you're only seeing the one contract that's in the order book, but you don't know how many more they have left to trade. Right? So that's what an iceberg is. It just means that they're adding orders second by second as the market gets there. So what do we do with that information? Well, first off, if there are icebergs that haven't finished yet. So for example, this one up here is still there. It means that there's like a magnet for price to come back to it again. That's one way we use them. Another way is we recognize when there's a bunch of them like this, that there's some kind of shenanigans happening, that the market is artificially forcing the market to stay at one exact level, right? So that they can convince people to go long, thinking, oh, it's support, oh, it's support, oh, it's support. And then you get something like this. So all of these contracts that went short in here, and these are really quick day trading bots. This is not like long-term investors doing this. So, they got short 180 contracts, 1,090 contracts, 160, 780, 100, another 2,600, and another 640. So they're holding a lot of short inventory. Well, guess where they got out of that? On the way down here. So for whatever reason, they wanted to hold the market up here, and then they got out on the way down. And so now the market comes back up again. So we don't always know what game they're playing. We don't always know what they're going to do because they're AI. They're self-learning algorithms, and they change what they do every day, which is a nightmare. But we know there's some sort of shenanigans. So what are we seeing right now again? They're doing it again. Some sort of shenanigans, right? They're going to try to keep the market stuck right here again. Maybe for 5 minutes, maybe for 15 minutes. You know what I mean? But they're playing some game again. So all we can do as day traders when we see a lot of icebergs is just recognize it's not a trend day. It's a choppy, sideways, grindy day until those icebergs disappear. It is even more so the case if you see icebergs above and below price. Right now, it's just above price. Pavel says, it looks like a lot of pulled buy limits to allow the quick drop. That is the other game that they play with the liquidity. It's really hard to see in this version of the order book. This is like every single contract in the order book, and they've got these bracketing bots, which just make it so hard to visually read. But if I look at the light, you'll probably be able to see it a little more clearly. Yeah, okay. So if you look, you got lots of liquidity below, right? Which would tell you there's buyers wanting to go long. But then as soon as the price comes down into it, they disappear. Let me zoom in so you can see. So you got, let me zoom in even more. So you got all these buy orders waiting here while the market is going sideways. But then as soon as it starts to come in, before any of them get filled, they disappear. Now, some of them got filled, a little bit right here got filled, but they just keep disappearing it and moving it lower. See, they move this liquidity down to here, right? They move this liquidity down to here at the same speed that the market does it. And that of course, happened in a fraction of a second. That was between 35 and 35.04. So 0.4 of a single second, they moved all that liquidity from there to there in a fraction of a second. So the market keeps dropping. Now they just start pulling liquidity altogether. They just start pulling the orders. They're still moving it down, but there's less now. You can see the color is less dark than it was up here. And again, all of this is still within a single second. We're now at half a second, okay, of time. The market continues lower. And so then they pull it completely. So in 1 second, or sorry, that's minutes. In 1 minute, they pulled all the liquidity that they had up here to nothing below price. And that just makes the market just fall like a brick. So that is another way that they use liquidity in the order book to fuck with the market. Now, that stuff is not about day traders. That's not about you and me. That's about computers. That's one computer trying to fool another computer. Design Knob says it's almost like computers are trading the market. It absolutely is computers trading the market. We don't have an event today, but anyone who's been watching this channel for a while knows whenever there's a news thing that's happening, you can literally watch almost every single order in the order books disappear right at an exact moment because it's all computers, at least in the futures world. You got your day trading bots, which are the AI that are constantly learning every day in real time and figuring out what moves they can make to make little, just pennies here and there. Real quick little moves. In and out, in and out, in and out. Squeeze people, get back in. Squeeze people, get back in. You got those day trading bots. You got the arbitrage bots, right? Arbitrage bots between the SPX and the ES. You got arbitrage bots between the SPY and the ES. You got arbitrage bots between the individual stocks that are in the ES and the ES. You got all these arbitrage bots that are getting in and getting out every second based on what's happening. And then you've got, the hedging bots, the bots that belong to the market makers who are selling options and then using futures to hedge their positions in the options market. And you got those bots. It's all bots. DNK says there are bots that look at human behaviors, i.e. the profile, and come for the stops. Yeah. And they're way more complex than that. It's not even just price levels, they use time and tempo too. It's fucking nuts. So they know if they push to a certain level and they spend a certain amount of time there, that they will get more and more people. That's exactly what happened, both at the overnight low and then at today's high, or yesterday's high, I mean, today. They did it twice this morning. They pushed below that overnight low and they kept it as resistance just long enough to get everyone short. And then they instantly blew right through. So they instantly squeeze all those sellers, but they don't give people time to get long down there for the move that's going to happen up. They use time to fuck with you. Then they get above yesterday's high and they do it again. They turn it into resistance. One little pop up, turn it into support. One little pop up and then break it back down. So they squeeze all those buyers and then they find support at what is now the C period low, and they instantly turn around and start coming back up again. So yeah, it's not even just certain price levels where they know they can squeeze the market. They know exactly how long, and they monitor the new orders entering the order books. These are computers. Okay. So as more day traders are buying, contracts or buying, options or buying underlying shares, it'll stay at that level. It'll keep chopping and it'll keep chopping. And it'll keep chopping as long as they keep going it. And as soon as that volume starts to taper off and people don't want to do business anymore, boom, that's when they make the break. And then they monitor, okay, how are people reacting to the break? And they keep it going as far as they can. I mean, it's like it is happening in real time, second by second. So here we go, round 2. They just did it again. Icebergs, reversing the market again and again and again and again. And then all at once, they come take you out. That's just the name of the game. But the good news is, as I always say, as long as you know it's going to be choppy, you can take that into account in your trading. Design Knob says, I miss the old days of Pappy trading with wooden nickels. Me too, man. Me too. I miss the old days of let the market break the initial balance, let it trend, wait for cessation of the trend, and then just fucking layer in limit orders and walk away and be profitable. It was it was so easy. But now you literally have to be watching the market every minute of the day because it's constantly changing second by second. Scooball says, what if I tell you they chopped 3 times today in a 6-point range for almost exactly 17 minutes? I would say that's very interesting. Do they do that tomorrow? Do they do that the next day? No, tomorrow it'll be an 8-point range for 14 minutes. And the next day it'll be a da-da-da-da-da-da-da. That's the frustrating part. You know it's machines. You know they're playing a game, but you can never know what game they're playing because they're constantly changing it. Scooball says, there is a question of how fast people get bored. Maybe it's 17 minutes. Yeah, maybe you're right. Maybe 17 minutes is that breaking threshold. Okay, so now we're back to having an edge. Okay, the momentum is up, but only as long as they stay above the C period low, which we are dancing on top of right now. So if we get, 2 points below the C period low, well, that means the momentum up is over. If we can hold it, it means the momentum is still going. We know the market is going to be choppy, but it still has higher odds of breaking the high than it does breaking the low if they can stay above that C period low. All right, here we go. Knock, knock, knocking on cessation's door. Nope, there it is. Cessation of the trend. All right, there will be rotation. Okay, so now how am I reading this? They tried to take the market lower. They couldn't do it. They tried to take the market higher. They couldn't do it. So to me now, this entire range, basically, well, we call it the initial balance. The A period low to the B period high, this is all one big chop zone. They did it all night long. Okay? They did it from 4 p.m. yesterday until 9:30 a.m. today. They just kept the market in a super tight, choppy sideways range. There's no reason on earth they can't do that again right now. So I would say inside the initial balance, this is a chop zone. It is rotational. If I was going to take trades, which I won't, they would be targeting getting back to the middle of the range. Okay, not directional trades for a bigger break one way or another. I could take directional trades if we get above the B period high and turn it into support and hold it, or we get below the A period low and turn it into resistance and hold it. Anything other than that, whether we stay inside the initial balance or we look above and fail or we look below and fail, anything other than that, and I assume rotation. Because these bots did it all night long. There's no reason they can't do it at least for a few hours today. So the market is rotational. Act accordingly. And again, I just want to emphasize another game they play is they do this. They do massive, huge moves, and then they go nowhere because everyone wants to see another massive, huge move. Either you made a fortune yesterday and you want to double your money, or you missed it because you were too scared and you want your chance. So if you just go back and look at the daily chart, you'll see it's very common that the market will have very large days and then very small days. Very large day, very small day. All right? Very large day, very small day. So we had a very large day yesterday. Having a very small, tight range day today would not be unreasonable. I do think we will get above the high or below the low at some point today. I think there is no edge in predicting which way it will break. Not right now. We still got bots, and they're still doing shenanigans. Any final questions for me before I say goodbye? Horsepower says this has been a really masterclass. Thank you for saying so. I appreciate it. If you think this is the masterclass, you should watch the Markets and Minds workshop. It starts next week on Monday. You can see the link in the description, marketsandminds.com. One final plug. I spent years putting this course together to try to make it all encompassing. So it's going to teach you how to read the auction, the things that I talk about during these live streams. Where is the market likely to do business? What it means if it does that, what it means if it does that. You'll learn how to hone your intuition. So becoming a good trader is not about taking a course. It's not about reading a book. It's not about learning to trade a certain setup. It is about creating intuition. It is a skill. So just think about like sports, right? I could teach you how to play basketball. I could teach you all the rules of the game. I can teach you how to dribble and how to shoot and how to pass and how to defend and how to, all of it, right? I can teach you every single element of basketball. That doesn't instantly make you a professional level basketball player, right? You then have to practice. You have to put in the time to gain a skill. The same thing is true in trading. But you could put in years, and I've talked to a lot of people that have. I've talked to people that have spent 10 years trading basically at break even. Sometimes they win, sometimes they lose, and they end up at break even in the end for a decade, and they never move forward. And it's because they don't understand the way they're supposed to be practicing, the way they're supposed to be getting better. And so they just tread water for year after year after year. If that is you, this course is meant to put you on that path to profitability, to teach you how to hone your intuition so that you know what to do when and how to get better and better. It helps you develop your self-understanding. That is learning how to understand your own personality, your own strengths and weaknesses. How does your brain work? And then create a system that's fit for you, not the guru that you follow on the internet, but you, your brain. We talk about managing risk. There is a way to trade where you are basically guaranteed not to lose money. Basically. You will, of course, have to be very extremely disciplined, and you will have to be able to force yourself to follow a set of rules. But there are a set of rules that give you an extremely high chance of making more money when you win than you lose when you lose. And that is called risk management. We teach you how to think in probabilities. Trading is all about not being a human. Don't be human as a trader. Don't think like humans think, using emotions and, intuitions. Use probabilities, what actually works and what doesn't, and you will hone your intuitions based on what really works. And then last but not least is a market understanding. We will help you understand why the market does what it does, how to recognize what it's doing, and how to take advantage of whatever it's doing that day. So on a day like yesterday, you could have been a trend trader, whether it was the trend to the downside in the morning or the trend to the upside in the afternoon. But today we knew not to be a trend trader. We knew even if it's going to go higher, it's going to be choppy, it's going to be sideways, it's going to grind. So if you want to be taking trades, you have to take that into account and either choose not to trade because you don't like trading choppy markets, or trade with much tighter stops, much tighter take profit targets because you don't want to lose if you get stopped out as much, and you don't want to miss the chance to take profits if you win. Okay? So I cover all of this in detail in the Mastery of Markets and Minds workshop. If you've been thinking about taking it, now is the time. I'll be going from September 16th to 27th, and I won't be doing it again for a very, very long time. So it's now, or probably like 6 months from now. It's food for thought. And of course, that workshop starts in 3 days, 23 hours, and 50 minutes. Get after it, y'all. Thank you very much. And we will see the members of the brigade tomorrow for the private stream. We will see those that come to hang out for the morning show in the morning. So once again, I will just emphasize, as the market has creeped its way back to the highs, this is not bullish or bearish. The higher probability is it's going to reverse back down. Only if they get above the B period high, 55.73, and can stay above it, can you even start to get bullish. Okay? Otherwise, it's likely to continue to chop. And the fact that we have these icebergs like this makes me feel like whatever bot shenanigans are at play are still in play at this very moment. And so they'll chop it up. Bye, everyone.